Good morning, good afternoon, good evening, wherever you are. Thank you for joining us for today's public webinar. I know that a lot of people are traveling and getting ready for Turkey Day, so hopefully it's not terribly hectic for you to be joining us. Good morning, Jim.
And some of us are a little hectic because we're traveling later today. And so we're trying to do the webinar, we're trying to trade, we're trying to pack, and we're trying to keep our partner happy. So it can be a little hectic. Okay, we start off.
I'll just mention a couple of things. For those of you that are new, maybe if you're not familiar with our website, go to jimdeltontrading.com. Right now, you'll see that the market profile primer is featured up at the top. But if you want to join our mailing list, you can do so right here during in this black strip area of our website. And then you'll also see links to our official YouTube as well over there, because we do release a weekend video every Sunday. Okay, I'm sorry, Jim, you can continue.
Okay, so we do these free webinars in order to continue attention on to the educational courses that we do. The next course coming up starts, is it December 6th?
Yes.
December 6th.
It runs from December 6th through the 14th. You can click on courses and then you can go to the detailed page and it will have, go to courses, go to this detail right here, and you'll see a little bit of an outline of what we will be covering. Something that we also do that's different for our primer specifically is plotting the market profile exercise. So if you do not have charting, you are not required to have any kind of market profile charts to take this course. But if you want to learn how to do it, what I call semi-manually, that's something that we do as an exercise together in this course, so that if you don't have charts yet, or you don't want to pay for charts, and there are some of those people that would rather do it manually, we teach you how to do that as an exercise together. And it's also something that we recommend that even if you have charts, that you do anyway, because then you'll have a deeper understanding and appreciation for the concept of value.
I did my charts, seven markets for about 2 years when I first started doing this. It gave me a great understanding. Jen, is there an offer for those that don't have charts?
Oh, yes. For the first time ever, for this primer, WindoTrader, which is the market profile platform that we use and that you see in our courses, they are offering a free trial to students of this primer. So there are 2 eligibility requirements, and that is that you sign up for the December primer, and you be a new subscriber for WindoTrader. So if you have never subscribed to WindoTrader before and you're signed up for this primer and you'd like to check out WindoTrader and give it a go, specifically WindoTrader Blue, then you can do that. And we are having another support webinar for those who are signed up for the primers in order to help make sure that they get signed up correctly and have a smooth installation.
Okay.
So if that's something that you're interested in, like I said, if you've got any questions about anything, you can contact us at our number below here, or shoot us an email at delton@jimdeltontrading.com. Okay.
Okay.
Do you want me to give you a screen, Jim?
Please.
Okay. There you go.
So I'm sure it's over a year away before I complete it, but I'm doing something I said I would never do. I'm in the process of writing a legacy book, and it's amazing how much work is involved in something like that, which I just swore I never do, but I'm underway with it. But the reason I mentioned that today is what came to mind when I was writing about here in the last couple of days. And one of the things that makes trading so very, very difficult, particularly for short-term traders, it's the irregularity of the market. By that, I mean, it's the totally unexpected occurrences that take place. There are some things, activities we can engage in that are fairly reliable, what to expect from them. That is not the case with trading, and I think it's that irregularity that adds to the fact that the percentage of profitable traders is so very, very small. But the example, and the reason I bring that up today, is yesterday was just an absolutely perfect example of that irregularity. With what happened with OpenAI on Friday and what was going on between Microsoft and Altman and the employees of OpenAI, totally unexpected in the market. And of course, you got this huge, emotional run to the market yesterday. Now, going into that, what I had written on the weekend, and there was if you've got mental flexibility, you can handle these things. And mental flexibility is something that we're also writing about. But if you remember on the weekend, you may not remember, but as Jen said, we do a weekend video. On the weekend video, basically what I said was that I still thought that the underlying structure of the market was very poor. And I think that adds risk. The other thing is the market had this big breakout last Tuesday, and it's basically up until yesterday had gone nowhere. That is not what you'd expect for something like the breakout that we saw. So I think the market was getting heavy, and also that a tremendous number of the people that got involved in that rally really were either underwater or didn't have much to show for it, because so much of the early move on Tuesday took place in the hours prior to the NYSE opening. So, but then it said, even though I didn't like the move, and it's got that P formation the day up, and then it looks like short covering, and that's really not healthy for a market. But the other thing I said was, but you don't fight trends. If you want to lose money, you don't fight trends. So it ended with, we had a 3-day balance. So the 3-day balance guideline, the balance trading guidelines were applicable for yesterday morning. And those guidelines are one of the guidelines is go with any breakout from the 3-day balance. And of course, that's exactly what it did. You've got the other thing we always look at is how much confidence is there from the opening, and the confidence from the opening was extremely high. There's the opening, and the market's straight up from there. This is a clear, this is a clear go, what we call a go with situation. Now, you then take, and where I'm going this morning, we're going to spread this out quite a bit. You then take and you look at yesterday, you've got very thin, then you get, some consolidation, very thin again. This is an indication of short covering. It is an indication of very emotional buying. And when you get that emotional buying with a poor structure, very low odds of continuation. Now, you have really no excess on the high. So you have really no completion to it. And where are we right now? We're going to open in, about 15, 20 minutes. And the last trade is right at the half back from yesterday, a mechanical reference. So we've got overnight inventory. There's the settle. So overnight inventory is short. The odds are that you get a counter auction relative to overnight inventory. If you don't get that counter auction, then the market's really weak. But what is so difficult about today, you've got NVIDIA reporting earnings tonight, and I think the stock hit a new high yesterday. You still don't have clarity on OpenAI. after, you had this huge move in Microsoft. You've got the Fed today, the minutes from the last meeting to give you some idea where the Fed is. So it is hold on just a minute. For some reason, I'm sorry.
Oh, looks like
Yeah, I don't know
your
what
computer was.
I was traveling yesterday, and hold on, I'm trying to make sure my computer got plugged in. No, it's not, wasn't plugged in all the way.
Oh, there you go. Oh, it was plugged.
Okay,
Okay, now it
I
is.
should be plugged in. I pushed the plug in when I came back from traveling. I just didn't have it all in. So it's a very difficult day. When we open within the center of the previous day's range, the odds are that you have a rotational trading day. And you have a rotational trading day. Generally, I recommend, particularly the closer the market opens to the center of the range, the more I recommend you just step aside. Let as the market is searching for, some kind of direction, step aside, because the odds are that you're going to have a lot of chop this morning, and chop is extremely expensive for short-term traders. A lot of traders, they get too excited about, oh, the market's opening, I don't want to miss the best trade, etc. Usually the best decision is, you're not the only one who would have that feeling. There's a lot of people have that feeling. When they have that feeling, you get crazy buying and selling with different opinions. You are best off to step aside, let the market chop, let the market do its craziness, keep your powder dry. Then after the market settles down, then look to see if you have something that's easier to see in the market. Okay, it's not very complicated today. It's not very complicated. The very thinness of yesterday is not good for supporting the upside move. Very stretched out, very emotional. That usually gets a market overly long. Questions?
Okay. You mentioned in a previous webinar that longer term money might be waiting for a 7 to 10% pullback before entering. Do you think that contributed to this rally?
I think there was some of that, but I think more than anything else, what contributed to this rally, I think the market just got exceptionally short. We had the market go down for 3 months. The low was made the final day of, I think it was the final day of last month. And I think the market just got very, very short. And then it takes something to trigger a short covering rally. And of course, you had a lot of people talking about, year-end rally in the newspaper and everything else. And then but I think on top of that, you had a tremendous number of hedge funds and particularly CTAs that were short. And what happens so many times with short covering, it takes a spark, but once that spark goes, it kicks it off. And so I think what happened is you had a huge short covering rally. The short covering rally then brings in the momentum buying. I see somebody disagreed with me what I wrote last weekend, but what I think happened, I think there were a lot of CTAs that were short, and I think, in fact, I know, maybe not all of them, but I do know of several that went from short to long. And that's, of course, just, really gives you a run on the market. But after you got this big move, it went nowhere. And the only thing you got yesterday was, because of the news from Microsoft. So I think it was a huge short covering rally, some new buying, but there wasn't any great follow through from that, which makes me very suspicious when I see this P shape. Okay, other questions?
Okay. Since the market levels are multiples of what they were when you began, Have you changed or thought about changing from 1 to 2 tick for the TPOs to a higher value?
No, I haven't. You know, it's such a minor, it's such a minor issue. Just how do I see the market? Um, it's just a personal choice. Okay, what else?
Is there supply at these higher levels? Will those caught short continue to keep this market up?
I have no idea. I mean, when you look at yesterday, that was a very unhealthy structure. The structure underneath the market is very poor. Yesterday's structure was just about as poor as it gets in there. So what that looks to me, it looks more like, just emotional buying, short covering and emotional buying related to OpenAI and Microsoft. But I don't see, and the volume was low yesterday too. Yesterday's volume was below last week's. So there was no indication that there was new money buying in there. It looked like a lot of speculative short-term money. I think it's a very uncertain market. I do think the market will be watching the Fed minutes pretty closely today. And don't forget, you got a lot of risk with NVIDIA. NVIDIA is at an all-time high. It's up 250% or so for the year. Great expectations. And who knows what happens after those earnings tonight. Last time it went crazy. But there's been a lot of talk about competition since. Okay, what else?
Okay, regarding yesterday's structure, can you speak to the clues that continue to the upside, that continuation to the upside was a strong probability following the midday consolidation phase?
No, it's just what you mean. Once a market gets a tone for the day, it's very hard to take that back. I mean, the mechanical thing is that you had an upside breakout. You had an upside breakout from the 3-day balance. Go with it. This just stops on the, looks like the P, there's the stem of the P, short covering, and it just probably wasn't over. And then you get those that are mechanical trading, momentum trading, prices up, and they go with it late in the day. Now, you didn't get any, this just looks like more emotional continuation. No real excess up here. I mean, we got some liquidation overnight, but you didn't have, I don't see any long-term money coming in and selling. I don't see any strong trading money coming in selling. I don't see any strong trading money buying. The volume wasn't there. I think you had a lot of short-term, very emotional traders, and they got short-term inventory too long. You get some liquidation, and now we'll see what happens. Right now, we should open right in about the middle. Okay, what else we got?
How would you describe the G pullback yesterday?
It's just, it's just a narrow little band in there. That's all. It was a very uncertain market. It's not a science, and don't try and make a science out of it. But it pulled back. I mean, when you look at this, the market's one time framing higher. Okay, it shows a cessation of one time framing with no follow through. We're not going much lower, folks. You stop one time framing. You had poor lows here because they're matching. It got the stops, took these, nothing there. Buyers come back in. Remember, the trend was up yesterday. Value was up yesterday. The overall trend is up. And this is just very consistent with what short-term traders are going to do. They're going to trade with the trend. Okay.
Okay. Is Jim looking at bond yields?
Not really. I don't think they're on the short-term trading right now. I don't think that's what the market's looking at. It may down the road, but I don't think they're looking at that right now.
Okay. The ES had 3 distributions yesterday and it left a poor high. Was that a sign of too much emotion in the market?
Oh, absolutely. Very stretched out, very emotional. And usually, remember, a poor non-excess high can result from the market that's too long. Just as the the low from last month had only, depending on how you keep it, only had a couple of ticks of excess or no excess. I think the market just got too short. Too many times, remember, if you got an excess on the high, it's one data point. Too many times people try and make too much out of a single data point. It confirms what they want to do or don't want to do. You need to look at the market overall. Overall trend is up. Do I think it's a strong trend? No, I don't. Do I like the underneath structure? No. But you want to go broke in a hurry? Fight trends. Be aware that there may be a problem. Be prepared to go with if it happens. But don't lean into the wind. One of the things that I say so often is in markets, you are usually better off to be a little bit late rather than a little bit early. Too many people, FOMO or fear of missing out, or greed gets in front of them, and fighting a trend is very, very costly usually. So, do I like the underlying structure? No. Am I short? No. Well, I've got a little trade on this morning, very little, just using today's options. But, if it breaks down, be a little bit late, not early. And I say that served us very well yesterday. Don't fight the trend. And that's, if you look at what I did over the weekend, it's exactly what it said. Don't fight the trend. You had a 3-day balance trading guidelines. And those are just developed based on what I've observed over the years of what traders do. Okay, what else?
If we trade back inside of the 3-day breakout, how would you view this?
How did it get there? Did it get there on high volume, low volume? It's never that simple. I mean, obviously, if it trades back in, well, then you have the potential for an upside breakout failure. But you've got to see, did it get there on good volume, on low volume? Was it high confidence, low confidence? It's not one single thing. Everything's a series of facts surrounded by other circumstances. So you have to be able to view all of it. The negative, if you went and got into the 3-day balance from the opening this morning and you had confidence and volume, that's one thing. If you, trade down there and the volume is slow and the confidence is low, that's a total different message. Remember the irregularity. One of the most common questions that we get, and I was thinking about this as I was making notes for the book. The question, if you had what word comes up more often? It's anticipate. Would you anticipate this? Would you anticipate that? And so many people are looking for, anticipation of this and that. Well, when the market's very irregular, as this market, and irregular just means that there's so many events that happen that, are unexpected. Yesterday was just a perfect example of it. You've got to be very cautious because normal action isn't going to make you money. You have to, when the markets are irregular like this, there's money to be made, but you have to be able to have mental flexibility. You have to understand the nature of who you're competing against. Understand that, the traders run one way and then they run the other way. In writing this book, I just got done writing a section about, and you've heard me talk about this many, many times. It used to be when there were pits on the floor, and you had the top step trader. The top step trader would realize that the smaller traders in the crowd were mostly leaning to the long side. Well, all of a sudden, that big trader put his hands towards the palm and he'd sell like crazy. And they'd all liquidate. As they got panic liquidating, his palms come toward you and he buys. He basically took advantage of the crowd because he was reading the competition. And that's, I don't care. This is a competitive endeavor. When you're in a competitive endeavor, you have to understand your competition. You have to understand more than likely what they're going to do, how you get them turned around, how they get you turned around. Very important to understand who you're competing against and what their behavior is likely to be. Okay, what else?
Okay, yesterday's high is both weak and poor. Weak because it matched a high from September 5th. On top of the market structure yesterday, it was stretched out. How do you handle the conflicting information?
There's always conflicting information. I mean, it's, there's all kind of things I can easily make a case for up. I can easily make a case for down. And like I say, it's basically one piece of information up there. Right now, where are we right now? We're going to open here in a couple of minutes. We're going to open right in the middle of yesterday's range. And then you say, okay, well, you've got the minutes from the last meeting today later, and then you got NVIDIA. So there's a lot of, short-term traders waiting to see what happens in here. So there's no nice, neat answer to your question. You look at it and you got conflicting information, stay out. Wait, let the market clear up. Too many times people are too anxious to trade. Okay. Remember, we've got the primer that starts on the 6th of December. It's an 8-day course. The first 4 days are linear. The last 4 days, we using live markets, and I'll do live market reports as well as, making comments throughout the day of what I'm seeing in the market. It's the inexpensive way for traders to take a more serious look at what we do, and what we do and how we teach is that of interest to you. It's also
Okay.
amazing when we first did this, we thought that most of our audience would be new. We were surprised. We found an awful lot of the audience were people that had been in previous courses and were just using it as a review. Jen, you were going to say something?
Yeah, no, I was just going to mention a question that we get all the time is, will these be recorded? And the answer to that is yes, they are recorded. And if you are a participant of this primer, you will get access to materials for 3 months after it finishes so that you have time to go back and review and rewatch. We do have a lot of clients that are international or have day jobs and can't always attend all of the webinars live. So not a problem if that is your situation. As well as, like I said, you do not have to have market profile software or charts in order to join us for this course. And it's a great course, even if you're somebody who has some knowledge already, you want to make sure you understand a lot of these basic concepts directly from Jim as Jim intended them. It's a great course because those first 4 days you can always ask questions, get your clarifications. Folks that have already done the foundation and application of the market profile e-course, it's another great iteration and, like I said, an opportunity to ask questions. Something that I'll also just mention is that we will be having a Black Friday sale this year on our e-courses. So if that's something that you have been interested in or looking to do those and get a discount, keep an eye on your email for Black Friday. Okay.
It's not a sale on the primer. It's for the other courses.
Yes. Okay.
Other questions?
Okay. There's one more question here. We are competing against computers that have no emotion, and that's an issue. Do you agree?
No. I think that the shorter term trading, I think is better left to the individuals rather than to the computers. Once you start to get a little longer term trading, and now I think there's some issues switch over there. But so many times people use the computers as an excuse, and I think you actually can turn it to your benefit. I mean, for example, when the market rallied last Tuesday, I mean, the confidence was high from the minute the news came. Yeah, their algorithms buying it, yes, but just go with it. I find it a benefit, not a negative. So many times people use it. Well, I couldn't make money because of the algorithms and stuff. They're just they're not always right. If you remember last June, the algorithms and the momentum traders from the institutional side took the market up very sharply. and everybody's all, not everybody, but people are talking about new highs for the year, et cetera, et cetera. And I'm sitting there watching the way it was done and the references. It wasn't too dissimilar from what I'm seeing right now. And, you know, it wasn't too much later. All of a sudden, they took all of that back and made new lows. So many of the, and I was talking to, you know, some people last week. So many of these programs are based on, you know, quantitative analysis, but the quantitative analysis, the input is price. Price is one dimensional. I mean, it's amazing when I was looking at this, how many different ways they have to study price, but it's still one dimensional. If you think about what we do, we put context around momentum trading. We don't fight momentum trading. That would be crazy, but we put context around it, which gives us a deeper understanding than people and the computers. They can do all the studies they want, but it's still looking at one dimension. Okay, final question or two?
Do thinner holiday markets affect your thinking about the market reactions?
I'm aware of it, but I don't, you know, I don't lose a lot of sleep over it. Like I say, the mental thing is mental flexibility. And you say to your point, okay, where are you? Are you in a holiday market? Yes. The market light will be thinner? Yes. Well, if you're going to engage in that market, expect it to be a little bit thinner. Be more careful. You know, it's just, you deal, when we talk about this mental flexibility, you deal with what the market gives you. That's, you know, it's like a defense in football. You're dealing, you know, with what the offense does. The offense is dealing with what the defense does. This is a big competitive game. All right, so the market, you know, it's very, very quiet, very, very quiet in here. And like I said, there's, you know, two big announcements today, and I'm going to think that's going to drive an awful lot of the activity. Okay, final question.
No, I think we're good.
All right,
Yeah.
Thank you all very much. Have a great holiday, and hope to see you in some of our courses. Bye now.
Happy Thanksgiving, everybody.
Thank
Have
you.
a great week. Bye-bye.